Welcome back to the channel, ladies and gentlemen. So in today's video, we're going to touch base on the SPY, the Qs, SMH, IWM, and the Dow using our preferred method of technical analysis, which is Elliott wave theory. Now, what in the world has been happening here? I mean, this market is giving us a bit of frustration, and yeah, that's what corrections are for. If you guys are not aware, corrections are designed to give you this type of frustration and knock you out of the market. So I hope you guys are being objective, and I hope you guys are being protective of your capital, staying put, staying still. No pun intended on the put thingy, because we missed the boat this morning on shorting this market. I did mention this to you guys yesterday. I was looking for that retracement. We're gonna go over that, so stay tuned to the video. All right, enough said, enough with this whole rant, and let's dive into the analysis. Actually, before I do, subscribe, give me a thumbs up, and hit that bell icon. Leave a comment down below so we could interact, and let me know your thoughts about this wave structure and where the fudge this market is going to head towards. So let me turn on our traditional moving averages, and let's make note of something. Okay, as I mentioned yesterday, only one instance in this price history since March COVID lows have we retested the 200-day period moving average, and that was back here in June. Ever since then, we have not even kissed this damn average, and I think it's time, ladies and gentlemen. It's not a crash, all right? It's not an all-out crash. I think I may be correct, and I know the headlines, not the headlines, because the headlines ain't saying shit about it, but Twitter and Instagram, a lot of people are just calling the crash on YouTube, right? I mean, whatever. Maybe I'm wrong. Who knows? However, I am only here to tell you that we are close to a top. Yes, we are close, okay? But this isn't it. We still have one more push to the upside. If you guys were patient through this correction, trust me that you'll recover everything you're holding. If it's in the red, obviously it's in the red at the moment. But it'll recover. Just be patient, because the next leg will soon come. Just a little bit more of blood in the street and carnage before we see the bright side of this fucking market. Just kidding. Excuse the F word. All right. Anyway, yeah, that is my frustration actually. So yeah, so we haven't really tested this market here, sorry, this moving average, and we've just been holding the 50 and the 100-day period moving average as support. So let me explain to you why we may see a retest of this red line here being the 200-day moving average. And so I'm gonna show, actually let's turn on our labels here real quick. So in the primary degree wave count, which is on the daily time frame, we see that from the COVID lows, we made our first wave one here on September the 1st of 2020. ABC pullback to October the 30th. All right, and then 1, 2, 3, 4. We completed our primary degree wave 3 here on November the 22nd. Now, at first, you know, if you guys remember, I was presenting to you guys several wave counts. All right, one of them being that we were going to see further upside if we held certain levels. However, we failed to hold those levels, and we broke below them, thus giving us conviction that this wave 3 here has been completed. Now we find ourselves in a corrective move on the ABC pullback, and now the question is, where the hell is this going to land? So here's what I'm thinking. All right, so I'm thinking that in order for us to retest this 200-day period moving average, we must reach the 23.6% retracement. As the days go by, we are going to, the moving average will start curling up ever so slightly, and then we see it meet with price action. The good news here is that we see the 50-day curling down. So we might get a bit of an instance where both averages are going to converge and give us that golden cross, and then we head on higher to the 5th wave in the primary degree. I don't know if that's the case. It might not happen, or it might eventually will, but that's what I'm waiting for. Now, yesterday we were noting about this zone here. I'm gonna zoom in here real quick, and we failed to hold the 100-day period moving average, even though it has been retested. It has faked some of us out, and then retested, head on to new highs, support, new highs, support, new highs, support, bounce, but we failed to go into new highs. Now we're breaking lower. All right, guys, so I know you guys already saw this two levels here that are our daily or long-term, or not long-term, but more of of a short-term-ish, all right, short-term-ish type of levels. But let's dive down to this area here, and let's digest and take a look at where price structure and the wave count is telling us. So taking you to the BDBD 30-minute time frame, and let's dissect. I'm gonna turn off these guys over here to give us a little more room. All right, so we're gonna focus from price action from January the 4th. We made our first wave 1 low. We then pulled back towards the 61878.6. all right, we made note of this resistance area. Okay, I remember clearly explaining to you guys here in the YouTube channel that I was looking for a 3-wave pullback to find support and then head on higher, but I was a little bit skeptical of this resistance, being that it was a retracement from the highs. Sure enough, it held it, and now we broke below. This is an impulsive structure to the downside. The good news here is that we are trying to complete this wave 3. So yesterday I made note of it, that I wanted to see a pullback towards a 38.2% at the very least to give us a good zone of risk to take a short position to the downside. However, we didn't get it. This freaking market just said, nope, we ain't gonna give it to you, and 23.6% retracement was it freaking thing, man. Anyway, so we ended up breaking lower, and yeah, so here we are. What the hell is the game plan now? Where the fudge is this gonna be? I mean, let's take a look, right? We're gonna take a fib extension, this little tool here, and we're gonna take an extension from the highs of wave 1 to the low of wave 1 to the high of wave freaking 2. All right, and what do you know? So let me turn these guys off. So equality of wave 1 will come in at 442 spot 12. Okay, now since we missed the boat here, I'm gonna wait for this price action to unfold. All right, it's gonna have to hit the 100% extension, because that is equality of wave 1. So we hit the equality of wave 1, all right, and then at which point we're gonna see if we start bouncing in 3 waves to the upside. All right, if we start bouncing 3 waves to the upside, obviously our invalidation level is gonna be at the low of wave 1. All right, and we want to see price action hold 3 waves of the wave 4. This area here is where I will take a trade, and it's gonna give us a good level of risk, because our stop is gonna be anywhere between the top of this wave 4 and the completion of this wave 1. All right, so ideally I like to trade those type of setup, because it gives us a 3-wave pullback. If let's say we come towards the 78.6 or the 618, it gives us a pretty good level of risk to then head lower to the downside. That's what I'm referring to. We missed the boat here. It doesn't matter. We are patient traders, and that's where we're gonna wait. All right, so that's the game plan. Wait for this 442 spot 12 to unfold, then wait for this pullback in 3 waves, and then head on lower. If by any chance we don't get it, the next level to wait for is this wave 4 pullback to take us lower to the wave 5. So it is likely that we are going to see price action head down towards 411, 436. Anywhere between this zone, ladies and gentlemen, kids of all ages, is where I anticipate this buy to find some sort of support. All right, anywhere between these two, because that'll be the higher degree wave 4, and we have to complete that. All right, this is a technical reset of this overall of the last 2 years. All right, and it's due. So I know a lot of you are starting to trade in 2022. You got in, now the markets are crashing, quote unquote, but they're not. All right, this if you are preserving your capital, hold on tight, be patient, deploy capital once we see further downside into this area of support. All right, enough said with this. Now let's go over to the Qs to see if we find anything positive over here. No, nothing positive in this fucking chart. All right, so wave 3 top here on November the 22nd-ish, WX, and now we're heading lower to the wave Y. All right, so from our December 27th high, we made our A wave, our B wave retracement to the 618. All right, zooming in, we got a 1-2. We're making the 3rd wave. Now, I made note of this today, that we are reaching the zone of support in this wave 4, right, on the Qs, faster than we are in the Nasdaq. Sorry, in the SPY. Let's take a look at the daily time frame. Let's see here. So, you know, what if, right? goodness, what if, yeah, what if the wave Y is completed, right? It is at the 23.6% retracement. So it is likely. I mean, who knows? Let's see where the 200-day moving at. Oh, wow. Look at that. Would you look at this? Oh my goodness. So, ladies and gentlemen, we are now nearing the freaking 200-day period moving average and the Qs. Oh, what a lovely sight to see there. Where's the 50? It's curling down. All right, so the thing is that we may see price action break below it, fake out traders, get the bears licking their lips, and then wait. They're gonna wait for this retest. All right, it's gonna break below it. They're gonna wait for this bounce back to retest this 200-day period moving average, act as resistance, and then they're gonna try to take a short. At which point, ladies and gentlemen, we're gonna get squeezed to the upside. I can't wait. So I'm waiting for this area. All right, we're gonna get squeezed here like a freaking pimple, and then we're gonna head on higher. So get excited, ladies and gentlemen, because that is almost time. Oh man. So anyway, so back down to the 30-minute time from actually the 15-minute. Let's turn this guy off here. Yeah, so we're almost there. This price structure here, it could take us down to a $356 region, anywhere between 356, 357, 366, 343. We may see a potential dip and then off we go, hopefully, right? Because I am anticipating that is the case here. We're gonna complete this overall 5-wave structure, all right, and then it's time for that larger degree pullback that now people are gonna be looking at and be like, wow, okay, it's here. This is area wherever this falls, maybe in sometime in June when the Fed starts to time.
Thursday morning, we're getting there, getting closer to the weekend.
Oh, what the hell was that?
Not that we're counting. Good morning, everyone. I'm Christine Tanya.
That was CNBC. My bad, guys. That shit scared me. Anyway, wow, that woke you up, I bet. If you guys leave a comment down below and you let me know what just happened, you guys will get a free access to the Trending Waves Discord group. All right. If you guys leave a comment down below and you let me know what you just heard, CNBC, all right, in the background, then, or, all right. Anyway, I think that was, I think you might have heard it. I'm going nuts here because I might have it muted in the mic. Anyway, so. All right, so yeah, so we're gonna wait here. If you guys leave a comment down below, if you mention CNBC noise in the background, if you heard it or not, leave a comment down below because that'll tell me that you waited for this. You know, you watched the entire video and you get free access to the Discord group. All right, whatever. Let me know down below. All right, so yeah, I'm gonna leave it like that because everybody's just paying attention to the SPY and the Qs. Those are the names that have been the most researched, and yeah, we gotta wait. Anyway, so see you guys tomorrow, and I hope to hear from you down below and see you in the Discord group. Take care. Bye bye.